Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as the US dollar slowly slides away from its 16-month high and trading around 96.12, the bearishness for the Australian dollar still remains as the ADX is getting a little bit overheated as it gets to around that 62 level. And also, the RSI has not been able to generate any renewed momentum, even though there is relatively strong bullish divergence from the MACD. As the market slides lower, the MACD has risen somewhat. Still, the bears are still weighing on this level of 71.1015 after recently challenging it, which was last viewed back in August. Could see further significant falls if we close under there from a New York. This would open a way back to 70 cents. Still holding in this down channel, and the market is still contained by that resistance around 71.6080 area. It looks like the European session is back in force in trying to trigger more stops. However, I'm not a bear at these levels. I feel the market is potentially in line for a rebound and therefore looks back towards that 71.5 to roughly 72 cents. Looking at the euro, since the bullish divergence kicked in as the price has slid lower, the RSI has risen, and also the MACD has somewhat supported a further, although negative because it's under the zero axis, but it has weakened and therefore could see further climb if we close above 113.15. This would initiate a move up towards 114 and likely to see the dollar index drop below the 96 handle and look towards 95.5 and reassess. The big drop in dollar yen, well, the market is still a little bit uncertain in terms of where we're sitting around the 113 area. I still feel there is at least enough room to get to 112.65 given from the technical aspects and reassess from these lows. It was recently respected as a rebound from that strong candle that we can see here, so do be on your guard. However, a close under 112.65 would give further risk down towards 111.5 to maybe around 110.75. Still pressuring the level of that is for sterling at 132.80. We've seen a couple of attempts there, but not quite breaking it yet. I still like this pattern, and therefore I'm not going to get bearish at this level, and I feel that the market could actually penetrate that top side and go in search for the 134 area. So I don't want to get short here. Let's see if the pound can pick up. CAD-Yen still remains somewhat soft, and as it pressures the support level around that low 88.30, could see further weakness and therefore see a slide down towards this region around 87 figure 20 and reassess. Technically, it's all set up for another down test. Looking at gold, well, the market's been a little bit whipsawed over the last 5 trading days since Friday's rejection of 1,815. Still, the technicals from the RSI are at this point trying to recover. But I feel that in light of the current pattern, that we will get another rejection around that 1,815 area. Not overly bullish, but I feel that there might be at least enough momentum to give that one upside kick before turning around. Looks like London's back in again and selling oil as it gets further or closer towards that low region of 68.5. That may actually progress further. I just feel it was more of a stop loss because the market's heavily long and therefore could see a move down towards this bottom side of the range, which is quite a drop. It's around $62 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.